Hey, everybody. Welcome back to the Pleb Underground, the signal without the slop. I'm your host, Phil. All right. We got some good news, guys. Even though Bitcoin's dead at 87K USD right now, 87,300 something. Still getting some good news. And we're going to take a look at that. All right, we've got a big announcement about a Bitcoin municipal bond. We are going to dive into that story. We're also going to take a look at there's a Wall Street Journal article that came out that Pierre alluded to a couple of days ago, or actually yesterday, and maybe it signals the bottom. Just maybe. We're going to take a look at some ridiculousness that's going on with Fablecoins, because of course they're not going away. Right? They're not going away. The state doesn't see anything beyond its own power. And of course, its own power is the ability to issue their own funny money. So we're going to take a look at what's going on there. Yeah. Also had a big announcement, supposedly, from Warren, Representative, Warren Davidson, I think. We're going to take a look at that announcement. That announcement yesterday, there was a lot of to-do about it. Well, what is it really all about? And we've got this great little clip of Bloomberg's Mike Malone calling for Bitcoin at 10K. I love when Bitcoin sinks. We just get, I mean, look, when we pump, we get absolute ridiculous hopium that makes no sense. When we dump, we get ridiculous copium that makes no sense. And I'm here for it. Anyways, guys, lots of stories, lots of fun. We're going to dive into it. And of course, before we do, I'm going to give a shout out to the Pleb Underground sponsor, and we are going to be right back. Let's frickin' go.
Pleb Underground is sponsored by Archimedes Emporium. Discover the pinnacle of precision engineering, starting with their Bitcoin logo wall clock, meticulously machined in Maine from a solid block of aerospace-grade aluminum, ensuring unparalleled durability and performance. Experience the difference of a product made without compromise. Head on over to Archimedes Emporium.
All right, let's dive right into it. Here we go. We're gonna kick it right off with this big announcement, right? That was coming out huge. He just wrapped a recording with Representative Davidson. Big Bitcoin announcement tomorrow from Capitol Hill. Oh my gosh, Phil, what is this massive announcement? That's right. You get a sigh. That's it, a sigh. Bitcoin for America Act codifies the Strategic Bitcoin Reserve Executive Order. Okay. Doesn't mean anything. And not to mention the fact that the Strategic Bitcoin Reserve right now is just seized Bitcoin. So all it is just taking it from people. Anyways, exempts Bitcoin payments of tax liabilities from capital gains. I could go for that. I could appreciate that. Holds Bitcoin tax payments in the Strategic Bitcoin Reserve. I don't really care. Tax payments could be saved rather than spent. Yeah, of course, we all want to pay less taxes. Anyway, sound money is essential to defending freedom. Can't disagree with that, right? I can't disagree. Unfortunately, governments and the state can never see beyond its own power. So as much as I appreciate the sentiment behind this, and I would love to see this type of stuff go forward, I am always cautiously optimistic, because the goal is always to continue the illusion of the dollar's strength. Right? At this point, it's really just floating on its reputation. There really isn't any underlying strength, with the exception of state-backed violence. So, yeah, that trust is eroding thin. That trust is definitely eroding thin. So, but look, right? Obviously, we know that Warren Davidson, he said that famous line, right? There's Bitcoin and there's shitcoin. It's nice to hear that from a politician. So, I do have an inkling of hope, but I always temper it with reality. Can't help it. Anyways, okay, that's it sounds like it's moving in the right direction. Okay, let's go take a look at we'll go take a look at this Wall Street Journal announcement, right? Wall Street Journal article published last night. It's the kind of signal that often marks a trend reversal. So, what did they say? The crypto trades that amplified gains are now turbocharging losses. You could just, you know what? You got to hand it to them, right? You got to hand it to the giant media machine to always make sure to introduce the correct FUD at the right time, right? Just as people are starting to feel a little bit uneasy, maybe a little bit afraid, right? There's a whole bunch of people that are desperately banging on the table because they sold their Bitcoin at what they believed is the cycle top because they're following this historical 4-year cycle and they're acting upon the clock, right? But I don't know, guys. I don't know. I was a big proponent of the 4-year cycle too. And I got to tell you, I'm still waiting for our cataclysmic event, which we are not seeing. We're not seeing it building up right now, right? When we're not getting our SBF, we're not getting our Do Kwon. So I'm cautiously optimistic. But yeah, good job, Main Street. Good job. Always ready to kick everybody down when things are not going the way that they seem that they should. But you know what? I would also maybe argue that things are going according to plan. So why not? Why not? Anyways, all right. Let's take a look at what's going on with the let's take a look at what's going on with the Fablecoins, right? The fables, because this is really the end goal of any state. Okay. Even though countries need Bitcoin per se, right? They need us to believe the opposite, right? They need us to believe that we need the government issued currency. And not only that, but we also need it to constantly expand, right? This is the belief that we must have. So just, we keep that in mind as we talk about stablecoins, right? All right. So this starts off with a post here from Mark Goodwin. Make institutions hold dollars at a 1,250% risk weight to their Bitcoin crypto exposure, right? Make exceptions for stables. Let banks use stables to meet this 1,250 risk weight. And of course, you can create stables out of thin air. Pump Bitcoin and crypto. Pump dollar demand. That's the real key here. Pumping the dollar demand. Oh, that's good. And my Bitcoin dollar. Dollar. I don't know why he wrote it like that. But anyways, let's dive into what he is referencing here, right? So we get some context for this. So US and UK revolt forces Basel to rethink brutal crypto capital rules for the bank. See, and again, if you remember the mortgage crisis, you'll remember that a lot of these garbage loans, right, were rated AAA, right, by the rating agencies because they're all kind of working together, right? Nobody's better than their incentives, and so it almost seems like these banks want to be able to. They want to have their cake and eat it too, and one of the best ways to do that is to make sure that they don't actually have to have the reserve assets to cover what they're issuing, right? And then you can blow the bubble up even bigger, right? Because you don't need to actually be holding the underlying asset as a security. Anyways, all right, let's continue over here. So the application of the 1,250 risk weight means that credit institutions, right, must hold their own funds of at least equal value to the amount of the respective crypto asset exposure. All right, this all makes sense. The report said that many banks interpreted the framework as a deterrent to engaging with cryptocurrency or stablecoin services. Make no mistake, the banks don't need a reserve. Okay, they issue debt. That's what they do, and then we pay it back. Okay, so like this is for them. It's like, wait a second. You're tying our hands here. We're trying to make money. This is what we're trying to do. You're making it hard. This is all part of the bubble construction, guys. Get ready. This is going to be fantastic. I've been saying this for well over a year. We are watching one of probably the biggest bubble in history be created in real time. And it's going to be stable coins. It's going to be all of this crypto crap. It's going to be all of these services. It's going to be a good time. I'm excited. Anyways, stablecoin boom requires rethink of rules, right? That's Of course. Before it was like, oh yeah, sure. We'll abide by your reserve requirements. But now when we understand how big this can be, maybe you just kind of go lenient on those so that we can get these products out the door a little faster. Anyways, the increase in stablecoin adoption requires fresh analysis and potentially more lenient stance. Really? Creating money out of thin air requires a little bit more analysis, you think? Reaching an agreement may be difficult as regulators are divided on core assumptions about has nothing to do with Bitcoin core assumptions about crypto risks profile and the role of bank issued digital assets. You play this game, make it seem like looking out for the best interest, right? Looking out for the best interests of the retailer. And we can think back to all those times that our best interest as retail investors was paid attention to, right? Like the 2008 mortgage crisis when Moody's rated all of those subprime mortgages as AAA, right? Or how about all of those rating agencies that said that all of these internet stocks in the .com bust, right? That were just going to the moon, even though they had no revenue. So they didn't make any money, right? At least at this particular stage, when we're looking at what's happening with like stuff like AI, those companies are actually making money. They actually have revenue. So, you can trust this, right? We can trust that we need to make the risk profile a little more lenient. And the best part is when all of this completely falls off the wagon, we get to go through the process of lessons learned. It's not about placing blame. It's not about people's bad decisions. It's about learning lessons, right? Because we've never learned the lesson of creating something from nothing and then it falling apart. We've never learned that lesson before in history, even though we've done it since the beginning of time. This time it's different, I guess. Yes. The fun. Anyways, all right. Still on with the stable coins, guys. Anyways, so the divergence in policies creates a competitive imbalance for the global banks. The playing field becomes significantly tilted. That's right. When you have a moat, you want to hang on to your moat. And hanging on to your moat usually means suppressing competition, right? And that usually means rigging the rules in your favor. This imbalance would influence which jurisdictions can build bank-issued stablecoin products, tokenized deposits, or even crypto custody solutions. And if you don't understand exactly what's happening here, it's that the UK and the US already have these more lenient requirements in order to be able to create these products. But you know who doesn't? The Bank of England. They need it. It's amazing, right? It's like, it doesn't matter that we're creating junk. The whole goal is that we want to get paid, right? Let's get paid. Okay. All right. The municipal bond. The municipal bond. Let's go take a look at that. I really like that story. It's it would help if I removed stuff off stage. I'm sorry, guys. It's part of the fun. Should probably upgrade my stream to have more images. Anyways, okay. So let's dive into this municipal bond stuff. And here we go. New Hampshire creates crypto history. It's actually Bitcoin history for once. For once, it's actually Bitcoin history. Launches first BTC-backed municipal bond. That's right. Live free or die. Except you can't smoke weed, which is kind of weird. Not that I care. I don't live there, but I'm just saying it's very weird to be like, live free or die. So you can get drunk, but you can't smoke. Yeah, that has nothing to do with this. I'm sorry, guys. On November 17, 2025, the State Business Finance Authority decided to give the go-ahead for a $100 million bond backed by BTC instead of going the traditional route of using government credit or public project revenue. And I got to tell you guys, this is like, for me, like this to me, this is the direction that we do want to go in. This is actually part of real adoption, using the BTC as the bond backing. Can't print any more of it. No central authority, no government controls it. This is Bitcoin is the bearer asset. This is what people don't. Anyways, a lot of people don't really pay attention to. Like this is the type of stuff in terms of municipalities, in terms of government. This is the type of stuff that matters. In my opinion. Anyway, all right, let's keep going here. Let's keep diving through the story. All right, so companies that want to borrow through this bond will have to fork up to BTC worth 160%. Okay, so still the over collateralization, right? We don't want to admit that Bitcoin is the asset. We don't want to admit that there's finally this digital bearer asset that is not centrally controlled or corruptible. So, okay, still doing the premium, but that's okay. At the same time, if the price of BTC drops and the collateral drops to 130%, there is a built-in safety mechanism that kicks in to protect the investors. Another customer for BitGo. Crypto custody firm will hold the BTC while the BFA will oversee the end-to-end process. Look at that, huh? BitGo gets another customer. That's a surprise. A big surprise. Does BitGo become an interesting honeypot? Maybe. That's Mike Belshy's vehicle, which, by the way, he was just shilling Zek. So no surprise there. No surprise there. Oh. Okay, so in terms of this bond, right? What does it actually mean, right? For a business, like if you're a company in New Hampshire and you need money, you can borrow up to $100 million through the program, right? And you just put up some Bitcoin as collateral. So you don't have to sell your BTC obviously to get the loan, and you avoid the taxes, right? So the other piece of it is that the state doesn't actually guarantee the loan; it's on the businesses to repay. But this is this is actually a perception thing, right? Using the BTC as collateral makes investors feel safer. So good job, right? Good job, New Hampshire. Why not? Like this is good stuff. This is what we like. This is what we like to see. All right. Let's go see here. What do we got? Cramer. What the hell is going on over there? Right? Almost feels like a cabal is trying to keep Bitcoin above 90K. I like Bitcoin, but I don't like any of the derivatives created to play it or game it or mine it. So we're not going to talk about the cabal that is possibly holding the Bitcoin price down. Instead, he's crying about the cabal of his buddies that are, no, I'm kidding, not actually his buddies, but the cabal that is keeping the price above 90K. How is Jim Cramer always wrong? Right? Like he's like the consistently wrongest guy. Just go back to shilling Sears, bro. Let's go back to shilling Sears. That's all there is to it. Yeah, exactly. The derivative products bad for Bitcoin because they increase the supply. It's paper, right? It's paper supply. And they can just lie. They can just lie about their holdings, right? Yeah, exactly. Bingo. Cramer is for entertainment purposes only. But the problem is that there's a whole bunch of people that actually listen to him and take him seriously, right? And of course, that's their fault, right? It's not. There's nothing we can do about that. To each their own. But it just sucks because he sucks, And he puts this kind of stuff out, and people sit there and think like, "Oh yeah, Bitcoin's being manipulated to be held up." Like, really, bro? We can't say that it's being manipulated to be pushed down. Really? All these freaking paper Bitcoin products. And I understand people are going to sit there and be like, well, we wouldn't be at 100K today. You don't actually know that, to be honest. Nobody actually knows that, right? It's just an easy assumption that feeds into, the ego if you bought a bunch of shares of this crap, Yes, exactly, Frederick. Reverse Cramer is way more accurate. Yeah, agreed. They keep him there for their own entertainment. That is an excellent point. He is totally the Goldman Sachs court jester. Speaking of court jesters, let's listen to Bloomberg analyst Mike McGlone for a second here. He's going to tell us why it's over. Okay, let's take a listen.
I pointed out when Bitcoin was about 10,000, it was going to drop a zero. I was 70% right, 30% wrong.
No, you were totally wrong. It's not, you see, do you see what happens? It's going to drop to zero, but it didn't. And you were freaking wrong.
because it went down to 3,000. I'm saying the same thing now. I think it can go back to 10,000. I mean, that includes everything going lower, unfortunately, means the stock market. And it's just normal. The key difference is from back then, there was only a few thousand cryptocurrencies. Now there's multi-millions, and we've had that pile in from ETFs, the Trump administration kicking in and accelerating it, and it's classic peak bull market stuff I remember seeing in 1999. So in the previous segment, Paul mentioned the VIX at 25. You look at that VIX 200-day moving average, it's a bull flag. Right now it's averaging about 19.5, and the key fact is 120-day realized volatility in S&P 500 is around 10%. If we end the year there, not only is it half the VIX, but it'll be the lowest since 2017. So I'm expecting this Bitcoin plunge to trickle down to the stock market, volatility to pick up, maybe just get to its average around 16%, and the whole thing tilts lower into the year end. I don't know what stops it at this point.
Okay. You actually think that assets, right, like Bitcoin, you think Bitcoin cares about the percent at the end of the year? It's us, right? It's humans. Like, we create these frames, and we seem to believe like, oh, well, then, I mean, based on what we're seeing now, that is exactly what we're going to see going forward. I got to tell you guys, in all fairness, if Bitcoin goes to 10K, number one, it is going to be extremely painful. This is not going to be a massive drop where Bitcoin goes to 10K and you get to happily stack that shit and all of a sudden it's back at 100K 3 days later. This is not what's going to end up happening. It is going to be a slow, painful grind all the way down to 10K. By the time we get there, you're going to have like all of the influencers telling you how it's going to be going to 6K and 3K. Okay? And how inevitable it's going to be. But the point I'm trying to make is it's not a freaking chance it goes to 10K. There are so many buyers ready to step in. I can tell you, I'm a buyer that's ready to step in. Why not? Are you kidding me? It is the bearer asset. Full stop. It's the bearer asset. The government, it does not have a central issuing authority. We've never had this before. We've always had garbage. Anyways. Yeah, I just don't see it. But hey, guys, if we end up getting that type of crap, right? If we end up getting that type of crap, it's just a massive buying opportunity. Okay. And the best example that I can use, which is not even close to that type of a drawdown from where we are now, was COVID. Okay. I'll never forget the day that the article came out. Bitcoin fails the COVID test. I emptied everything I had in my bank accounts to buy that thing. I was like, this is it. This is like my, because I had been stacking it at much higher levels. So to be able to sit there and start buying at like the 4K region, I mean, yeah. Anyways, these guys are nuts. Look, I get it, right? I get their position. They've been looking at this for a very long time. Familiarity does breed contempt. I can see it myself as well, right? Like I believe I can almost tell the difference between the way I used to look at Bitcoin and the news around it and the way I look at it today. So I don't know. I just think he's dead wrong. And I think, who was it? Somebody just said something. Curious Bitcoin just said, yeah, we're going up now, not down. Yeah, I totally agree. I think this is a total bear market trap. And I'll tell you, and I know this sounds totally corny and whatever, I can't help it. But the spike that we made yesterday after we dumped to go back up to those levels in previous bear markets, we would just do these flat lines and then we would drop and then do these flat lines and drop and just keep doing this kind of like stair step all the way down. I am seeing elements of that stair step, but I'm also seeing every single time we drop enough, there's like a massive buy that comes in and pushes it right back up again. So I think that what we are experiencing and what we're seeing is simply just indecision, plain and simple. We are seeing market participants who don't know what to do. But that's the beautiful thing, because once you understand Bitcoin and you appreciate Bitcoin's qualities, its unfuckwithable qualities, you just don't care what the markets are doing. You just want to make sure that, to the Kingo's point, you stay solvent and you can continue to stack sats. That's all there is to it. 86,888. Look at that. Got the magic number. Anyways, guys, it's definitely one hell of a rodeo. Don't forget tomorrow, right? Tomorrow we're supposed to have Lawrence Lepard, and let me see, because I think tomorrow's episode is gonna be earlier. Yeah, guys, tomorrow's episode is going to be starting an hour earlier. It's going to be like at 11 a.m. Eastern time. Okay, so just a heads up. Make arrangements, right? Make arrangements to get the author of the big print. So should be fun. Should be a solid conversation. And yeah, guys, this is gonna do it for us for today. You have a great rest of the day. Thank you all for joining me. I appreciate it. Yeah, I am still bullish. I'm not leaving, right? Not leaving. Take it easy, guys. Have a good one.